everyone. I'm Jordan Rodriguez. We're the Warnick Spear Wealth Managers. It's Friday, May 28th. It is raining behind me. Sorry if I'm a little bit frizzy. I got caught in it. No solicitations or recommendations will be included in this podcast. I mentioned this last week, but this week's review isn't really going to be a review. It's going to be a continuation of the format from last week. I had the pleasure of interviewing Erik Swords from BNY Mellon. He pretty much lives and breathes software tech and, most importantly, blockchain. He's been a portfolio manager for their blockchain innovation fund and has actually been with the firm for many years. We talked about cryptocurrencies, but also talked about blockchain in general. I don't really want to crowd this up too much by even giving a review. I think this is one of the coolest conversations I've had the chance of having, so I'm just going to get right into it. I'm also going to attach the 2 Bitcoin videos, 2 cryptocurrency videos I did at the end of the conversation, so that if you do need a review for what Bitcoin or cryptos are, how they function, you can give a refresher, because I told him right off the cuff I didn't want to waste his time having to give those definitions. I really dug into the insights that he has on blockchain and cryptos and how they are and will affect our everyday lives. I hope you guys enjoy. Welcoming Erik Swords on the podcast. Erik, thanks for taking the time today. We already handled the intro and whatnot. I think the way that we want to structure this is everybody's talking about cryptocurrencies specifically. I figure we'll start out there. I'm actually really excited to hear more about blockchain insights in general and kind of applications outside of cryptocurrencies. I know that's an area that you focus on. We'll spend some time there as well. But before we get into either of those, do you just want to explain to the listeners what your area of expertise and focus is?
Yeah, absolutely. And thank you for the invitation to join the podcast today. So again, I'm Erik Swords. I work at Mellon, and we're a wholly owned subsidiary of Bank of New York Mellon. I've been at the firm for about 15 years now, and I serve in a couple different capacities, but primarily as a senior research analyst and portfolio manager. So over my 20-year career in the investment landscape, I've pretty much been attached to technology and more specifically software. So as you can imagine, things like cryptocurrencies certainly fit within the context of what I've been doing over the past several years. But this particular topic has been of deep interest to me personally. And we've done quite a bit of research as a firm dating back to 2015 on both blockchain and cryptocurrencies.
Well, that's fantastic. Now, I guess staying on theme with cryptocurrencies, what I don't want to waste your time doing is having you explain to the audience what is Bitcoin, what is a cryptocurrency. We've already taken care of that. I'll link those videos later on. I'd much rather hear your insights digging a little bit deeper. I guess a natural place to start, why cryptocurrencies and why now?
Yeah, it's a good question. I mean, you have to step back for a second and think of the origin of Bitcoin, which was a little over a decade ago now, and what function that was intended to serve in the utility that it would bring to what was perceived to be an issue with the global financial systems. In my opinion, and especially after having done this for several years now and being pretty deep into the topic, the epiphany for me was really after we went through the beginning stages of the pandemic. And what became clear was that we could certainly function as a society, but there were all these other things that were already in place that were in motion as a result of what has been referred to as digital transformation. And as we, turn the corner to see that, meetings and talking to family and meeting up with friends could all be done remotely, even though it's a different type of experience, it was something that just furthered that movement towards digital transforming our society. And so as we were talking about, what are the next things that could potentially be subject to this, it was just really a question of why shouldn't we be exploring the topics as far as currencies, how economies and our financial systems are functioning. And it's all with the understanding, and this is what's very different, I think, than, if you go back to something like the internet bubble. The vast majority of these technologies were already created. They already had use cases, and had been around for quite a while. So, to me, it was natural that we started to think about how we could transition our monetary system to more of, or one in which it would be supportive of digital currencies and things of that nature.
It's all, it's all fascinating and something that is front and center. Do you ever worry or at least consider that let's just use the analogy of high-flying tech growth stocks, that during this period of lockdown or stay at home, there were inflated values because you can pick an arbitrary number of years, whether you want to call it a decade, 5 years, whatever, of technological advancement essentially pulled it forward over a 12-month period. Do you think there's any risk that the price appreciation in cryptocurrencies could be mirroring something similar? Maybe the widespread use is still a decade or more off. We've just kind of gotten into this frantic short-term phase of seeing all the potential applications and the prices responding accordingly.
Yeah, I mean, there's a lot to unpack in that question because we're covering a lot of different things. I think first and foremost, you're absolutely right. And that was what I was alluding to in the prior question with regards to digital transformation. So that was accelerated quite a bit. And now we have to think about what are the things that are sustainable versus what are things that were necessary but could go away or be utilized at a lower rate. In this particular case, in thinking about the digitalization of economies, I mean, if we think about where we are as far as the overall world, I guess you could look at it. Using the baseball analogy, I mean, we haven't even walked out of the dugout yet. Thinking about inflated prices. I mean, sure, look, there's cycles that we've already seen occur. Just specifically with Bitcoin over the past decade or so, could it be inflated for a period of time? Sure. I'm not one to, use that saying, oh, well, it's going to be different this time. But I think it is fair in this particular case to think about some of the things that are different this time in comparison to what's happened in the past. And I think two notable developments have occurred. One is the overall interest from institutions, and that's gone up exponentially, which I don't really feel was taking place during the 2017, 2018 boom and bust period. And similarly, you have companies that are out there that are now embracing crypto as far as how people are transacting, as well as enabling merchants to accept it. So there's a very big difference this time, and I think again you hit the nail on the head with regards to the acceleration and digitalization of our society overall.
Well, it's refreshing to hear you say that, somebody who's an expert in the subject matter. It's difficult when you hear somebody or a group of people, clients, whatever it is, talk about Bitcoin or Ethereum being unapproachable because it has run up so much. In our minds, we're thinking about the stock parallel, and we'll touch on this later. But if you just think about the potential just addressable market when it comes to cryptocurrencies, I love your analogy of we haven't even walked out of the dugout yet. Don't even talk to me about innings. We're right at the beginning. Sticking with cryptocurrencies before we jump to blockchain, a ton of volatility inherent in the prices of these cryptocurrencies. If you've followed prices, a lot of people are in cryptocurrencies for the first time, invested in cryptocurrencies for the first time over the past 12 months. They're not used to the big price swings, but if you go back and look at charts, this is pretty much par for the course when it comes to investing in Bitcoin and other cryptos. Is it a fool's errand to try to tack a price target onto Bitcoin or Ethereum or any crypto, or is there a way that you use to value these currencies?
Great question. And, look, I think one of the big debates is what is all this stuff worth? It's a very difficult discussion to have with people like my father, as an example. He's 74 years old, and he's like, why on earth would I pay money for something that's just created by a bunch of computers and networks? I get it. It's confusing, and especially for the older generations to understand. What we need to recognize as market participants is that there is a whole younger generation that is chock full of digital natives. And so they've been born and raised around all of the technologies that we're utilizing today. So with that in mind, I think, that's the bigger part of this equation that I think is super relevant. Let's go back to the question again. Give me the question again, if you don't mind.
So I guess the meat and potatoes of the question is putting an actual price target on a specific cryptocurrency, or do you have any methodology that you lean on at this point to really value these cryptos? I know there's a couple different ways that you could, whether using the gold analogy, commodities, whatever it may be. What's your thought process?
Yeah, absolutely. And so as a firm, we've actually done quite a bit of work on this, so much so that we published a sort of a mini white paper on how we think about Bitcoin valuation. And we ran through a number of scenarios and things that we look at. But the question that I would pose to people is, why should we be looking at this instrument any different than the things that we look at today? From a fundamental perspective, what are the things that you're looking for? For example, what is the total addressable market? Some people like to, put Bitcoin in comparison to gold, and I think that's a reasonably fair comparison. And what we know about that market is it's about $9 trillion. So why not use that as a starting point? That's not bringing into call sort of like what is the overall global currency market worth, and in this particular case, it's orders of magnitude larger. So that's another potential way to be thinking about it. We've also looked at the stock to flow methodology, which I think is very interesting, and that's something that we've been watching very closely. It's followed nicely over a long period of time. So it's like anything else. I mean, if you think about how you view or value a growth stock, the definitions and things that people have been using over the past 10 years have evolved pretty significantly, where the metrics aren't the traditional PEs that you used to look at in the past. This is no different than that. I think we need to think about valuation realistically and practically, because we're talking about this as a store of value. So I think that's very important. But the market's ultimately going to sort out what that value is worth, and I think we're providing tools to be thinking about what the potential is over the long run. The one thing we do know is that we can, look at what it costs to produce to mine a Bitcoin, and that's something that you sort of are able to start with and understand that that's the cost that's going into what each one of the Bitcoins are worth.
I think that's a good natural segue into the last question that's focused on crypto specifically, and then we'll move on to broader blockchain. But just general headwinds and tailwinds as it faces the currency. Obviously, right now, headlines are talking about ESG concerns. And I've gone through briefly with the listeners on the line different headwinds and tailwinds facing these cryptos. In your mind, what are, I guess, if you had to isolate your top, because there's a number of different headwinds and tailwinds, your top couple of picks for headwinds and tailwinds?
Okay. So one of the things that we have also provided some research on just recently was Bitcoin, and looking at it through an ESG perspective. And where we ended up coming out on that was slightly favorable from an ESG perspective. Obviously, everybody's talking about the environmental aspects of it, but it's the S and the G that people tend to forget about or leave out of the equation when looking at the overall impact to society. So from our standpoint, it's actually a positive, and I think that's one of the things that people are going to come around with in supportive of being a tailwind for this adoption over time. I think it goes without saying, and especially living in the United States where we don't have a Bitcoin ETF that's available in the marketplace today, the regulatory landscape is very complex, and especially with this topic. Obviously, you have central banks that are working through digital currency issuance over time. You also have geopolitical concerns as well. It's no secret that China has made great strides, both with the digital yuan as well as their blockchain services network. Those are two very big aspects of what I think their longer term aspirations are. So, there are questions as far as what the impact is going to be to the dollar over time. That is a real risk, I think, that we face as a society in terms of what does that ultimately mean for us. From a tailwind perspective, look, I think it goes without saying, the younger generation is starting to take over. So we have to rethink the way that we're doing things overall. And it's not just about cryptocurrencies. I mean, we're talking about decentralizing a number of different industries that have been centralized for a very long time. You're looking to take inefficiencies out of systems. So, transacting in something where it settles in real time, I think that's, much more enjoyable to the people who are transacting than the way the systems are set up today outside of some peer-to-peer money transfer protocols. So look, I think there's a lot that's going on in the space. I think there are a bunch of conflicting headwinds, but at the same time, I think the power of digitalization and the movement towards where we're heading now is, the path of history has changed so significantly in the past 18 months as far as where it's leading us to. And I think that overall the tailwinds are going to overcome the headwinds, but it's just going to take a lot of time. There's a lot of for lack of a better way to say it, plumbing that needs to take place with the financial institutions, whether they're new fintech companies that are entering into the marketplace or the legacy companies. I mean, look, Bank of New York Mellon is a legacy bank, and just recently. Did we announce our support and availability towards the end of this year for custody of Bitcoin? So, that kind of shows you that there's a slow path of adoption, and different countries are viewing this very differently, and so are governments. There's different reasons to want to put up roadblocks for the adoption of something like blockchain, which the whole notion is to move away from the centralization aspect that we're so familiar with.
So you hit on something that's just a natural transition into the broader blockchain discussion. Different industries, all of our brains right now are programmed that when we hear about blockchain, we automatically go to financial transactions, but you hit on a number of different centralized industries that, for lack of a better term, need to be decentralized, whether we're talking from a trust standpoint, from an efficiency standpoint. Can you give us an update on some different use cases for blockchain technology as they relate to industries maybe outside of financial services?
Yep, and this is a great point, because I think this tends to get lost in the mix of the discussions around cryptocurrencies. Bitcoin and blockchain have been synonymous, and for good reason. Each was born out of one another, so they wouldn't exist without each other. So that's sort of the starting point that we're at. Cryptocurrencies have certainly stolen the show, because there are markets that are available where these are trading in, and the rest of the story from there, and we are where we are today. But from a financial institution perspective, there's still a lot of work to do, and I don't want that to be going by the wayside. We can maybe come back to that. We generally think of it as financial systems, enterprise blockchain, and then tokenized assets. So those are the three big categories that we're using today. That's evolved, and I would expect it to continue to evolve over time. Enterprise is an area that I think is super interesting, and where we've seen a number of use cases evolve over the years. It's not real hard to figure out how efficiencies can be created with this technology. Basically from the standpoint that I guess we could dive right into the use cases, in the sense that if you think about how inefficient supply chains are today, this is something that tons of work has gone into all throughout our lifetimes to try to, increase margins, improve productivity. This is a technology that basically enables that end-to-end transparency that supply chains have been lacking for a very long time. And even though it does kind of move away from the heart of what blockchain was supposed to encompass as far as decentralization, there are ways where centralized blockchains can be used very effectively. It's not just for sort of the supplier-facing issues that have been seen over the years. It's also the information that customers are looking for these days as well. Again, with that mindset of a younger generation, the types of information that people are looking for with different products today is somewhat ridiculous. I mean, they want to know the name of the farm that an egg came from, how long it transport, what temperature it was stored at, when it hit the shelves, and how long it's been sitting there. So there's a lot of information that's in there. Now, what's interesting is that in using that as sort of the baseline, the connectivity aspect of different types of systems, different counterparties, and all of the different constituents that would be considered in a blockchain. What it's enabling companies to do is utilize and leverage other technologies. So there's a number of examples where automation has been able to be sped up significantly or utilized in different ways that didn't exist in the past. Similarly, artificial intelligence is an area where, as we all know, data, garbage in, garbage out with data. And if you are certain that the data that's going into any type of repository is the correct data, the outcomes are going to be exponentially better as far as what any type of artificial intelligence technology is putting out. So, utilizing some things like that in the use cases have been far-ranging. I mean, look, this is thought to be a technology that can take something literally from cradle to grave. So you almost immediately go to start thinking about things like health records, medical records, and things along those lines. That's where this technology in certain countries is starting to be used today. Going back into financial services, simple use cases like speeding up settlement time. I mean, instruments that took 30 days to settle. I mean, why should that be the case these days? So those are areas where settlement times can be moved down to like T+0. Along those same lines, liquidity is another issue. I mean, private companies for years and years and years, it was very difficult to create some sort of a liquidity event. These days, the private securities are trading on different exchanges, and that's creating liquidity. So that's, and not only the liquidity aspect, but also documenting that the transactions actually took place, ownership was transferred, and having all the records electronically stored. So, I mean, thinking about something like that and how much more efficient it is, and all of the paperwork, the paper trail that is taken out of this, it's pretty substantial.
There's about 500,000 different directions I want to go from there. I guess let's, before I continue on to the next question, based on what you're saying about different industries, different companies being able to utilize blockchain, how do you see that manifesting itself into a monetizable way? Do you see a world where each company is going to have their own blockchain engineering team, or do you see it almost more like a blockchain as a service, where there are going to be a few companies that develop where they're able to package together a blockchain as a service, business-facing product, kind of like, think of like a Snowflake or an AWS data companies, what they're doing now with data services. Do you think blockchain as a service is going to be coming down the pipeline fairly soon?
Yeah, so blockchain as a service already exists with a number of companies, and it's all the vendors that you would expect. Many of the cloud providers, the cloud-based application providers as well. And it's something that's not isolated regionally. There's companies over in China, for example, that are doing and providing exactly the same service. To me, that's not exactly where the value is really going to be created. It's a service that runs simultaneously with other things that they're likely doing, namely applications that are being run, and linking up people or different constituents among a blockchain where everything is documented in one central ledger. So that to me it's not a super exciting business, but it's a necessary evil. Where there's two things that I think are happening that are very important. We already hit on one of them, in the earlier question, but it's helping to create the efficiencies for businesses. So taking costs out. That's a less sexy use case, but it's something that's critically important, and especially for a number of businesses that tend to have lower margin profiles. The other thing that I think is very interesting is the way that this is being utilized, and I hit on this before too. There's actually a revenue component to this, and it depends on which industry you're looking at, but I'll give you an example. There was a large grocery store chain in France that was experimenting with blockchain technology. And they were initially utilizing it for their supply chain management overhaul that they were doing to create efficiencies. And so initially what they found was, it was helping them save some costs because they had a better idea of where things were in transit. They were able to replenish shelves quicker and things along those lines. But what they didn't expect, and what I thought was it was fascinating to see, just from the standpoint that they had only done a test in a very limited area, along with a very limited product supply. And what they ended up finding out was they were driving more foot traffic. And the reason for that was because there were new people coming into their grocery stores that had never shopped there before, because they understood that there was a level of information that they could get out of those products that you could now go and scan and find information about. So there is actually a revenue component, even with a grocery store, that can potentially be used as output. The other things that go along with this, and again, thinking about financial institutions, think about the amount of flexibility that can be created with a balance sheet. If you take this technology to the max, ultimately what it could potentially do is help deconstruct a balance sheet. That's when you get into things like tokenizing assets. If you have a building sitting somewhere, why not use that? You could hold on to ownership. Why not float it in the market and let the market value it, but you raise capital? There are real life scenarios that have been taking place just like that. And there's other things that can be done along those lines. I don't know if you're familiar with Aspen Coin, but this was a very cool use case. And basically it was the St. Regis Hotel decided that they were going to raise capital, circumvented the traditional, we'll call it banking methods that they would have done to raise capital. Is about $19 million, if my memory serves me correct. It took them about 4 months to do the entire transaction, which was remarkable considering the regulatory hurdles. But they were able to get everything done. And so basically, to simplify this, they were raising capital to fund, some improvements in the building. As a result, they issued a token for that same amount of money. The people who obviously helped raise the capital, they were issued tokens as well. But so all of a sudden you have a token that's in a market that can be freely traded. Now, in addition to that, so that's one aspect of it, which I think is very interesting, just as far as how finance functions or can function today. But in addition to that, people who own the Aspen token, they're being put in a situation where now they're getting perks at St. Regis hotels. So that's one thing that kind of creates a loyalty program around this. In addition to that, there are tokens like this that can pay a dividend as well. So that's something that I think is super interesting, that provides ownership of an otherwise super illiquid asset that you could actually potentially generate revenue from.
That's a fascinating story. I hadn't heard of Aspen Coin until right now. I'll have to look into that further. Um, Companies, industries, countries in general, are there any specific areas of the market that if you had to give a letter grade or a ranking to are just vastly head and shoulders further than other industries as far as blockchain adoption? And then the flip side of the question, are there any pockets of the market that you see I think I'm one of those people who thinks the total addressable market here is infinite. I think everybody could benefit from blockchain in one way or another, but areas of the market that are just vastly their heads in the sand that blockchain should be being adopted on a widespread basis, and it just isn't.
Yes. Okay. So first of all, I'm glad we're on the same page that the market sizing is infinite. So we'll use that as the starting point. From a letter grade perspective, look, there's been a progression of this over time, and some of it has to do with the players that were involved, what the initial technology was designed to attack, and so on and so forth. So financial services, I think, receives the highest marks with regards to their embracement of the technology. There's still a long, long way to go, so I don't want that to overshadow what the ultimate point is, and that's there's a ton more work to do. I think other industries have been slow to embrace the technology as they've waited to see the use cases prove themselves out. And, sometimes these things take quite a bit of time to actually see some efficiencies from. Areas like manufacturing and retail, I think are kind of coming along pretty quickly. And especially after we've seen some of the use cases evolve in the past 2 or 3 years now. Transportation is another area where I think it's, very interesting as far as the use cases. The one area where I feel it's lacking, that it could be utilized a heck of a lot more, is in identity and identity management. This is something that I just feel like we're not hearing enough of right now, but if you consider the very simple use cases like a passport or something along those lines, to an institutional perspective like AML or KYC uses. These are areas where blockchain could be very, very useful, a cost savings technique, as well as, a potential revenue generator from the mere fact that you could actually onboard clients much quicker.
I get this is just a little offshoot question about if you have heard anything, but it's been shocking to me that we just got done with a pretty tumultuous election cycle where huge portions of the population just didn't necessarily believe the results of an election. Have you heard any potential use cases for vote? I think I read somewhere that Switzerland is utilizing blockchain for voter registration. Are there any companies, or is there any rumblings of adoption of some sort of blockchain solution for voter registration and casting votes?
Yeah, so interestingly, I think there have been 2 or 3 tests that have been done in the United States using blockchain. They were very, I would say, limited use cases where it was the one that I have in mind. It was with the military, and it was basically tracking or documenting soldiers that were abroad that wanted to cast a ballot, and so it was limited to like 15,000, I believe. And from everything I gathered, that went off without a hitch. Now, it begs the question, to your point, why would we not be utilizing a technology like that? And I think it's absolutely correct. I mean, it solves a number of different problems. It keeps a record of, things that are otherwise kept somewhere else in paper form mostly. And it keeps things true and fair. So I think it's a perfect mechanism for us in the United States to be utilizing. But yeah, there are a number of countries that are throughout the globe that have been testing this technology. I think it's something that you'll certainly see more embracement of. But there's even in Washington, it's still, the Washington crowd. So there are reasons why you could see you wouldn't want this to happen potentially, and that doesn't mean that you believe the results or don't believe the results of this past election. It just goes without saying there's inherently fraud in elections that occur across the globe. It's unfortunate, but it's a reality. So this is a way that I feel like we could easily take that out of the equation and be much truer to society as a whole.
So there's kind of one final tie-in question that I want to let you speak on. Before I do that, I just want to ask one more crypto-facing question for the clients listening in, because at the end of the day, a lot of people are looking for investable advice, just things to build off of when they're thinking of putting their money to work. If you're vetting different coins, let's just put ourselves in the shoes of a client, and you're looking at investing in a broad basket of different cryptocurrencies. Are there different, whether we're talking proof of stake versus, proof of work, whatever it may be, are there different coins that you look towards as more legitimate than others? Obviously, we're not saying Bitcoin versus Dogecoin here, but are there different types of coins that you think have a really sticky use case moving forward, and other types of coins that may be newer that have components that are very easily duplicated or improved upon that might not last the test of time?
Yeah. So first of all, what I would say is, investing in single asset cryptocurrencies is a very complicated and, I would argue, dangerous game right now. Again, after spending around 6 years working on this topic, running a blockchain innovation fund, it took me over a year to gain enough comfort with a high degree of conviction to put Grayscale Bitcoin Trust in a diversified equity product, just to kind of set the table for where I stand in this. I don't want to be dismissive of really any of the cryptocurrencies that exist today, because I think in most cases, and this, we have to take off the bottom 5 or 10%, whatever it is, for the most part, there are good intentions behind why a coin exists, what utility it serves, and the potential good that it could create. It's going to take time to see how some of these things play out, though. And obviously, of Bitcoin, and what purpose that's serving today as far as a store of value, just generally speaking. Ethereum, which right or wrong, I like to compare more to oil. It's almost like fueling the financial ecosystem or the fintech ecosystem. So I think that's something that deserves a heck of a lot of attention. But then I would say it falls off a cliff after that, as far as what the utility is specifically for all the different tokens. There are some very good use cases that are out there, like something like Sushi Swap, for example, but it hasn't gotten to the point where it's reached scale yet. So that's something over the next 3 to 5 years that I think is going to be super interesting. And it's certainly going to create opportunities for investors at large. I will say this once again, though. I think it's a very, very dangerous game to be putting or allocating a significant amount of money to individual tokens at this point in time, just because of in all cases right now. I mean, these things aren't insured. There's no backing to them per se. So there is the other side of the equation. There's no 1-800 number that you call if you forgot, the number to or the password to your wallet. I mean, those are some of the things that are problematic today that I think people need to be aware of. It's a lot different when you are able to purchase something like Grayscale Bitcoin Trust, which again, that's single asset, but at least you're not having to worry about taking custody of Bitcoin, storing the keys, putting it in cold storage. So I think there's a lot more work to do for us as a society before we can really start looking beneath the surface of the initial use cases that have come out, and where I would be at a point where I feel very good about going out and recommending or purchasing, for our institutional or retail clients in the funds that I manage.
So here's the last question, and it's honestly less of a question, more just setting the stage and having you speak to it. It feels like we're at a point in time where there's this tremendous intersection of technology, mostly Internet of Things, 5G technology, enter blockchain into the conversation. all of those things, if you look at each of them individually, it seems like one of them isn't going to be able to get to the data analytics you can throw in there too. One of them won't be able to get to that next level without the other. There's this environment where they're all interacting with one another. Again, pick an arbitrary point in time, 10 years, 20 years down the road. What does the world look like to you? How does this progress?
Yeah, first of all, I think you're spot on. We've written about that in the past. You've hit on a bunch of things that we've written, so good questions, and hopefully we can catch up on that at some point. But yes, this convergence that's taking place, I think, is fascinating, and it comes at a time, which we could pinpoint back to the pandemic again, where this digital transformation with technology that already existed has just been embraced at a clip that's never been seen in our history with regards to any technology for that matter. So this progression that's going to take place over time, I mean, what I envision is, a much simpler application of technology. So going back to storing keys for Bitcoin and using cold storage, like, all these things are somewhat complicated if you're not tech savvy, and that could be a reason for people to not want to utilize, something that otherwise could be characterized as a great asset class. So I think there are limitations that we're going to see be removed from, some of the things that we see today, which is very early stage. In the end, what I see is something that's much more frictionless, I guess, in the way that I would characterize it. And what that means is just, doing a transaction, everything is connected, so you don't have to worry about it. Identification, that's something that should be electronic, and it's very easy for it to be pinpointed as far as who's doing what and who's who. Things like records, home sales, all these different things that are super inefficient, not secure in many cases, and can have lack of documentation. To me, it seems like something that's just going to go away over time as we're able to deploy the technology successfully. There's a lot that needs to go into that in order to make that work, obviously, and we're seeing that in some of the hiccups that have occurred with newer companies that have hit the market that are attacking areas like the insurance industry, which is super inefficient. But even creating a company from the start, just a few years ago, you can still see that there's a number of hiccups that are growing pains, maybe you could call them, that they're running into as they move along this path. So, overall, I don't want to give off the impression that this is something that's easy. It's not happening today. It's not going to be happening in the next couple of years. But what we're going to continue to see is this move towards more and more of a frictionless society where it's just much easier to transact. It's much easier for counterparties to work with one another. And there are a ton of efficiencies that are created as a result of it.
Erik, this is great. I mean, it's a topic that obviously excites me. It excites you too. Maybe it's because I'm a millennial, but even just thinking about this topic and the endless use cases and just what the future holds, something that is super exciting to me. I really appreciate you taking the time. I'm going to have to follow up with Brittany and get some of the white papers that you were talking about so we can tack these on when we send this video out to clients so that they can reference. It sounds like there's plenty of written work out there.
Yeah, no, there's quite a bit. You hit on seriously like 5 things that we've written, including one connectivity, and we put that out, I think, in May of last year. And the whole idea behind that was the convergence of these technologies and just how they're sort of, feeding off of one another. But yeah, as far as the blockchain topic is concerned, we have a ton of things that are out there, and more recently, trying to attack the questions that people are asking about Bitcoin, and we'll start moving more into other cryptocurrencies, where applicable. Going back to the question that you had asked before with regards to other cryptos, I can't in good conscience go out and tell somebody to go buy like Cardano, for example. It's not that I don't like or appreciate what Cardano is doing today. I just feel like there's a number of things that still need to be sorted out, and it's just going to take time for the marketplace to do that. One thing that's a little scary is when you start looking at the market caps of some of these coins or tokens. It's it's a little scary because you look at that in comparison to some of the equities that exist in the marketplace, and it's like, well, wait a second, what exactly are they doing here? But great questions. I really appreciated being here. I'd love to follow up if there's other stuff to do beyond the white papers that we can send over to you. But love to keep the dialogue going either way, and really appreciate the invitation.
I'll hold you to it. Thanks so much, and we'll talk soon.
Okay, sounds good. Thank you.